Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. What a roller coaster week and a session. Now the dollar index is looking to finish the day just about at 94, maybe just below 94. This is more than 1% from the high that we saw earlier in the week. Now the euro on the other end has recovered. We're holding right at 117. Now this all comes ahead of tomorrow's big non-farm payroll read. Now, ultimately, we've been bullish the euro this week, and we have been bullish the yen. The euro has come off of a big support level down at 115, and it's recovered very well. Now, today's run has hit, and we talked about it on the FX Rundown last night. It almost got there yesterday, and it was close enough for us, but today it hit it head on. Major three-star resistance right at 117.17 to about 117.45. Now it's stalled and pulled back just a bit, and as it's consolidating, you have to be neutral going into tomorrow. We have German manufacturing early in the morning, as well as French manufacturing, but ultimately it's the non-farm payroll read, looking for average hourly earnings to increase at 0.2%, and then non-farm payrolls to increase at 189,000 jobs. And later in the day, ISM manufacturing data is due. So we're going to see another choppy session. Ultimately, what it comes down to today is this morning, Wilbur Ross announced the tariffs on the EU, Canada, and Mexico. A lot of volatility has ensued, but it has put pressure on the dollar. You know, the PCE data this morning was mixed. You saw the month-over-month number come in a little bit better. The year-over-year was in line. However, personal spending did come in a little bit better. Now, this could have arguably helped strengthen the dollar, but earlier in the morning, CPI data out of the Eurozone. This is a number that does not deviate much from expectations. Came in much stronger in a sense, and ultimately that really got the ball going on supporting the euro. We've also seen some good news come out of Italy, and it's the market as well has started just to have that calming feeling from all of the volatility and fear upon that Italian crisis earlier in the week. Now, what does this mean for the yen? You know, the yen has held the 200-day moving average, and it started to bounce back up. This is the trade we talked about, buying a test to that 200-day moving average. We talked about it Tuesday night, came in through Tuesday and Wednesday, and it came back up about 92.5, testing first key resistance. If you've been able to catch that trade, it's another one. You must neutralize yourself going into tomorrow's non-farm payroll. We're going to see a lot of volatility. Now, we've already been neutral on the Aussie and the Canadian. The Canadian has gotten hit today as Canada has retaliated with tariffs. Now, it does come as a little surprise how quickly they came to a press conference and announced this, but you're seeing the Canadian dollar, which was at 78. Now, we do like being long if it's able to close above 78, has now almost about a penny from the highs. So with all this volatility, we look for how things set up after tomorrow's non-farm payroll read. Our long-term bias does not change, and we are long-term bearish the dollar. Give us a call. We're here to talk about it. 312-278-0500. You can email us info@bluelinefutures.com. Remember to check our website for updates, and you can sign up for a free trial of our research. Also, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.